So we have on set Tom Lauricella here with Wall Street Journal, going to tell us a little bit about the TVIX. This thing has just been, it's been a wild ride over the last week. Can you tell us, first just give us the scoop on what TVIX actually is and why is the SEC interested in it?
Sure. I mean, just a bit of a recap. Essentially, this is an exchange-traded note, like an exchange-traded fund, except it's much more got more complicated inner workings. TVIX is intended to it's a leveraged product, so it's supposed to do twice the moves of the VIX. So you're taking something that's already very volatile, prone to big moves,
and doubling it.
And then you sort of throw in the quirks of leveraged ETFs, which, as we've seen even in leveraged stock ETFs, these things are just a recipe for disaster when it comes to investors holding them. They are not meant to be held for more than really a day or two. But you see a lot of investors who don't understand that, don't realize that. They think, oh, it's just a simple wrapper like an ETF. I can just buy and hold this thing. It'll be a hedge in my portfolio. Wrong. It doesn't work that way. Then you have these other sort of complicating factors in that, sometimes with these products, what they're doing is they're taking something that's not very liquid or not a very deep market and making it extremely liquid. That's alchemy that is destined to
yeah, unlike an
fail.
ETF, also there's no underlying asset supporting the exchange traded product.
Right.
Yeah.
So in this case, all this money came pouring into this thing in the first 2 months of the year, hundreds of millions of dollars, and they just simply, Credit Suisse just simply could not manage it. They were just not, their infrastructure was not there. This thing should never have been allowed to get that big. They had to close it. All sorts of other chaos ensued.
And then last week it collapsed, right? Lost 60% of its value. You could see the chart there. Yeah. People just got hosed essentially. I mean, no one knew that this, or I guess some people maybe thought it could happen ahead of time, but by and large, though, most didn't, though.
Well, the professional investors were playing it, right? They expected what would happen, and they put positions on around it. It was the retail investor, the individual investor, that was hurt.
It seems that way for the most part. I mean, you could almost see just overnight when Credit Suisse found that it had to shut off the spigot for new shares, the short interest in this thing just skyrocketed. So, every sort of hedge fund or prop desk under the sun who is watching these things, and that's that's who their sort of natural audience thing is for this, just piled in, short this thing. You probably had a little bit of a short squeeze that drove it up even further. But the professionals were all over this, and meanwhile, as we documented, and our colleagues at Wires have documented, you had individual investors just buying this thing, not realizing they were just walking into basically.
Right. And now the big story now is the SEC is looking at this, right? I mean, that's the big hook for today. Is that? Well,
I mean, the question that we got to look at. I mean, look. First of all, there's tons of disclosure in these things. So, I mean, I'm sure the SEC will be looking at the disclosure. Whether disclosure was sufficient. But there was also sort of this oddness in the trading in that this thing collapsed before Credit Suisse and publicly announced it was selling no shares. There's a lot of chatter about whether word leaked. I mean, the thing just fell out of bed, and then all of a sudden Credit Suisse comes out and says, oh, we're selling new shares. A lot of eyebrows are raised about that. So, I mean, it may be that turns out to be, something, that we'll find some other issues.
Is there any sense how many of the investors in this particular exchange-traded note were individual investors? I
mean, it's very difficult to tell with ETFs. It's very hard to know, but, I mean, there's at least some out there. These things, they're an interesting thing. It's kind of sort of the industry says, look, we warn people about these. We say you should not own this a long-term investment, but they're out there. They're simple. It's sort of
simple
like
to trade,
it's like a it's a self-destruction device. But you say, by the way, we're going to sell this to you, but you should know that if you use it, you're going to self-destruct.
This is obviously a big red flag.
So should these things even be out there?
That's the big question.
Yeah, fascinating story.
All right. Well, Tom, thanks so much for bringing us to speed on that.